Bismillahirrahmanirrahim. Assalamualaikum and good day to everybody. Today we are going to learn on the next chapter in the introduction to financial accounting, that is books of prime entry. First of all, let us look on the learning outcome of this chapter together. At the end of this chapter, we hope that the students will be able to achieve all these outcomes. Okay, number one, the student should be able to explain source of documents. Number two, identify the types of journal and ledger. Next, to prepare the proper journal and subsidiary ledgers. Finally, to prepare a full set of accounting records from source documents to trial balance. Recall in chapter 1, we have learned the accounting cycle. So this is the process involved in the accounting cycle. As you can see, the recording system consists of the whole accounting cycle, starting from the identification of source document and the recording of transaction contained in the source document to the rest of the process. It starts with the recording of transaction in the journal, which also called as the first book or the books of prime entry, followed by ledger, trial balance, and ends with the preparation of financial statement, which then this financial statement will be analyzed and reported to the accounting users to be more meaningful to them to make their own decision. So this accounting process will require us to extract the information from the source document first. So let us continue by identifying the definition and the types of source document that found in the business. Each business transaction must be supported by source document. Source document is the original document that contains the key information of a business transaction. It is created when business transaction occurred. It includes the description of transaction, names of the parties involved, transaction date, and the amounts paid or received. Therefore, when the business transaction occurred, we must have the document that supported the transaction. So this document will explain the description of the transaction. For example, like the names of the parties involved, the date of the transaction occurred, and the amounts paid or received, if any. Therefore, source document is the starting point of where the business transaction is collected. All right. So these are among the common type of business source of document. We start with the purchase order and the sales order. So what is purchase order? Purchase order is a document issued by a buyer to a seller that outlines the expectation in terms of the type of product or service a buyer plans to buy. So once the buyer interested to purchase the product from the supplier, the buyer will issue this document listing all the products that they are required, including the quantity. This purchase order will be kept by the buyer and sent to the seller. On the other hand, once the seller receives the purchase order from buyer, then the seller will issue a document called sales order to confirm the sale of goods or the services required after the purchase order received. So in the sales order, the seller will detail out the confirmed information such as the quantity, the product specification, the price, delivery date, address, the payment method, and other relevant information that considered important. This document will be sent to buyer and the seller will keep the original document. Another type of business source documents are delivery notes. Okay, once the order takes place, then the goods will be shipped to the customer. When the seller ships the goods to the customer, they will send together a document called delivery notes. So this delivery notes is a document that accompanies a shipment of goods. The document will provide a list of product and the quantity included in the delivery. Delivery notes also serve as a checklist to buyer. Therefore, the buyers will use these delivery notes to check whether all the products that they purchase are received or not. If anything missing, then the buyer can contact the seller to inform what is lacking. Next, when the purchase or sales happen, the seller will issue a bill to the customer. The bill is called invoice. So invoice will detail out the goods sold or the services that completed. The information contained in the invoice are the terms of payment, the date of the transaction, the quantity, and also the price. Basically, there are two types of invoice, namely sales invoice and purchase invoice. Sales invoice refer for goods sold on credits. So when you sold good on credits, we will issue sales invoice. On the other hand, if we purchase some goods on credits from supplier, then supplier will issue a purchase invoice. The original invoice is sent to buyer and the copy is kept by the seller. Next, another source of document that may involve are credit and debit notes. These are special notes issued by seller to show the amount to be refunded when the buyer returns some of goods they bought earlier. So in the seller's book, the document that shows the amount to be refunded is called credit note because in the seller's book, the buyer's book will be credited. The buyer's account will be credited as to show the amount of reduction from the amount they owed. Whereas in the buyer's book, the document that to show the amount to be refunded is called debit note because in the buyer's book, the account of seller will be debited as to show the reduction in the amount owed to the seller. Okay, next is receipt. So receipt is a normal document that we receive upon payment. So once we make a payment, usually the seller will issue us a document called receipt to show that the payment has been made. Once the buyer paid the bill on us, the seller will issue a receipt. This is the common practice. Okay, another source of document that is quite important to show the business transaction is deposit slip. It's a written form used to deposit money into a bank. For example, when you want to bank in cash, after you have completed the transaction, the automatic teller machine will issue you a document to show that the deposit has been made. So that is also an example of deposit slip. Another types of deposit slip is that when a buyer pays by check or cash, then the seller will write a bank deposit slip, which will be taken to bank and attached together with the check and cash deposit. The deposit slip will show the amount of money deposit and the breakdown of the check's amount and cash. This slip is sent to the bank and the counterfoil in the paying in slip book is kept by the depositor. Last one, we also might have payment voucher. This is an authorizing document for a payment. The voucher can be issued for various forms of payment, such as payment for wages and salaries and petty cash expenses. Payment voucher serves as an internal accounting control mechanism that ensures that every payment is properly authorized. Okay, so once we have collected the information from the source document, the next process in the accounting cycle is to record the transaction into the journal. So what is journal? Journal is the first book that business transactions are initially recorded. Hence, the accounting journal, also known as books of prime entry. Each journal contains detailed records for the types of business transaction pertaining to a specific area and recorded in a chronological order. Meaning you have to record date by date accordingly. There are two types of journal. First is general journal and the other one is specialized journal. The function of general journal is to record for transactions other than those recorded in specialized journal. While specialized journal consists of 6 types of specialized journal based on specific transaction. Okay, so we have to identify first the type of the transaction. If the transaction can be recorded in any 6 types of this specialized journal, therefore the transaction cannot be recorded in the general journal. On the other hand, if the transaction is found not to be recorded in the specialized journal, then it will be recorded in the general journal. Okay, the next process in the accounting cycle is recording of transaction into ledger. What is ledger? Ledger is a book consists of lists of accounts with the purpose of transferring transaction from a journal and classify it into separate account. This process is also known as posting. After business transaction has been recorded in journals, the total will be posted to appropriate accounts in ledger. There are 3 types of ledger. First, sales ledger, which consists of all accounts receivable or debtors of the business. This is also called as personal accounts. Number 2 is purchase ledger. Purchase ledger, on the other hand, consists of accounts related to accounts payable or the creditors of business. This is also personal accounts. Finally, we have general ledger. This general ledger will contain all accounts other than accounts receivable which has been recorded in the sales ledger and accounts payable which has been recorded in the purchases ledger. So it could consist of real accounts such as cash account, bank account, and capital account, and nominal accounts such as purchase, sales, and salary account. What is nominal account? Nominal account refer to the accounts that related to revenue and expenses item. Okay, so these are the example of revenue item, sales, expenses item, purchase, salary. Whereas real account refer to account that not included as nominal account and real account, and personal account. So example are cash account, bank account, capital account. Okay, let us look the detail of the books of prime entry. Detail regarding the function. As I mentioned just now, there are 2 types of journal. One is general journal, the other one is specialized journal. So let us look at the function of each of the journal. We start with the specialized journal first. There are 6 types of specialized journal. Number 1 is purchase journal. Purchase journal is to record goods purchased on credit. So how to find the information? Usually, the common type of source document used is invoice. Next is sales journal. Compared to purchase, for goods sold on credit, you will record it in the sales journal. And the information could also get from the invoice. So, the invoice will be issued by seller to customer. Will detail out the quantity of the goods sold, the description, the price, and so on. Next, we have another type of special journal called written upwards journal. Written upwards journal is to record goods returned to supplier, where the goods has been bought on credit term before. So the source of document to record about this information is in the credit note from supplier. Next, for goods returned by our customer, the transaction is recorded in written inwards journal. So for any goods returned by customer who purchased the good from us on credit, this transaction is recorded in written inward. You see the difference? Written hours is to record goods that we return to supplier, where written inward is to record transaction for goods returned by our customer who bought the goods on credit before. So the information can be collected from the credit note that we send to the customer. Next is cash payment and cash receipt journal. So we start with cash receipt journal first. Cash receipt journal is to record any inflow of cash transaction. So if you make sales on cash, then the transaction should be recorded in the cash receipt journal, not in the sales journal, as sales journals is to record goods sold on credit. So the information can be collected from source of document such as receipt. Cash payment journal, on the other hand, is to record any outflow of cash. So any transaction that involve cash payment is to be recorded in the cash payment journal. One of the source document that commonly recorded the cash payment is payment voucher. Similar to the previous example, if the purchase is made by cash, then the transaction need to be recorded in the cash payment journal, not in the purchase journal, as purchase journal is only to record the goods purchased by credit. Okay, we're done with the 6 types of special journal. Next is the general journal. So what is the function of general journal? The function is to record other transactions that cannot be recorded in these 6 types of special journal. The example are transaction related to drawings of goods. So when the owner took goods for personal use, the transaction cannot be recorded in the purchase, sales, return upward, and so on. Therefore, the most appropriate books of prime entry will be general journal. Other examples are purchase and sales of non-current assets by credit. Okay, as you compare to purchase and sales journal, this journal is to record goods, not non-current assets. Goods is referring to the stock, assets that you bought for resale. Non-current asset is the asset that you bought for the operation of the business. So there are 2 different items here. Therefore, the non-current asset is not suitable to be defined as good, as it bought not for resale, but for the business operation. And since it is not bought by cash, so you cannot record in the cash payment journal. Or if the sales happen, you cannot record in the cash receipt journal because the purchase and sales of the non-current asset is by credit term. Therefore, the suitable books of prime entry will be general journal. Next, examples are correction of errors, to record opening entries, and to record adjustment. Okay, we're done with the types of the books of prime entry. Now, let us try on the following question to test whether we understand the function of the books of prime entry. Okay, these are the list of business transactions for Zakwan Enterprise. What we are going to do now is, for each of the transaction, we need to state the appropriate book of prime entry. As we learned, there are 2 main books of prime entry. general journal, and specialized journal. So in the specialized journal, we have another 6 types of special journal. Therefore, we need to identify it according to this transaction. Okay, let us start with the first one. The keyword here, Zakwan. Zakwan is the owner. He started a business with 50,000 cash in hand. So it shows that there is a cash inflow transaction into the business. Therefore, the most appropriate journal is cash receipt journal. Look at example number 2. Next, the business deposit 20,000 of the cash into bank account. In this transaction, there are 2 transactions involved. One is the receipt of money. Okay, so this will be recorded in the cash receipt. And another one is the cash payment of money. So the cash that has been banked in is referred to the transaction to be recorded in the cash payment journal. So as you can see, for the rest of the transaction, for example, on the 4th, 5th, 7th, and until 10th of January, it involved the inflow and outflow of cash. So we have to find the keyword to identify whether the transaction is to be recorded in the cash receipt or cash payment. Remember, cash receipt is to record the inflow of cash transaction, whereas the cash payment is to record the outflow of cash transaction. So you have to identify it accordingly. Okay, let us look on example of purchase journal. Is it correct? Okay, on 15th of January, purchase of goods from 9 Enterprise by credit. So we made a purchase of good. What is good? Goods refer to the stock or inventories or assets that we bought for resale. And we bought it from 9 Enterprise by credit. No cash flow involved. Therefore, the most suitable journal will be purchases journal, as purchases journal is to record goods purchased on credit. Okay, look on the 19th of January. Sale of goods to Humaira on credit. So here, we have a sale of good and these sales on credit. No cash flow involved. Therefore, the most suitable will be sales journal. Okay, look on the 21st of January. We return goods to Nain Enterprise worth 300 ringgit. Who is Nain? Back on 15 January, Nain is our accounts payable or creditor. We owe Nain because we purchased the goods on credit, but somehow they may be due to the sum of defect. Okay, we have returned goods worth 300 ringgit to Nain. There's no cash flow involved, therefore, the suitable journal will be return outwards. Return outwards is to record the return of good to supplier which bought on credit. Next, on 24th, 200 ringgit worth of goods returned by Humaira. So this time, we have returned from our customer, and our customer is Humaira. Who is Humaira? Who is Humaira? Humaira is our accounts receivable because on 19th of January, she bought good on credit from us. So when she returns the good, we will reduce her debt. We don't pay her cash. So the most suitable journal will be return inwards journal. Okay, for the rest, okay, you can see it involved the cash flow transaction. So you may identify whether it involved cash payment or cash receipt accordingly. Okay, next example. So on this example, again, we can see, okay, the same question where we need to state the appropriate books of prime entry. Okay, let us start with the first one as an example. Alicia. Who is Alicia? Alicia is the owner. She started the business with 30,000 cash at bank and 10,000 cash in hand. So, in this case, there will be cash receipt journal and cash payment journal. Why cash receipt journal? Because you have introduce your, you have bring your cash money into the business, and then you deposit the cash into the bank. So it involves cash receipt and cash payment. Okay, as for the rest, you can see there are other journals to be recorded, and we have discussed it before. The next thing that I want to discuss is related to example for general journal. Okay, so let us look here. For general journal, number 10 of December, Alisha took out cash and 6 bottles of multivitamin product amounted to 300 ringgit and 500 ringgit respectively for her personal use. Okay, what we can conclude here, there are two journals involved. First, when Alisha took out cash, so there is cash outflow. Therefore, there will be cash payment journal. And another transaction, when she took out goods or 6 bottles of multivitamins for her personal use, then this transaction is referring to drawing of goods, not drawing of cash. So these drawings of multivitamins will be recorded in the general journal. Okay, another example we can look is on 31st of December. Alisha brought in her computer worth 4,000 into the business. Alisha is the owner. She brought in her computer into the business for business use. There is no cash flow involved. There is no purchase of goods. Instead, she brought her asset to the business for business use. Therefore, the most suitable is general journal. Okay, student, I'm sorry about the first one. Okay, after I have read again, I can see that there is a mistake in the answer. The answer here should involve cash receipt journal only. There is no cash payment journal involved, as she did not bank in the money from the cash that she contributed. Instead, she put the money together at the same time. Okay, the sentence said, Alisha started the business with 30,000 cash at bank and 10,000 cash in hand, meaning she's not transferring the cash. It's not logic, eh? If you introduce 10,000 cash and you want to transfer the cash into the bank at 30,000. So here I can see there is no logic for you to record cash payment journal. So the answer only cash receipt journal for these two transactions. Because Alisha start the business by bank in cash into the business, and at the same time, she contribute cash into the business. Okay, so the answer is cash receipt journal only. Okay, that's all about the example of how do we identify the journal based on the transaction. Next, we are going to learn on preparing the journal based on its format. Okay, we will start with the first journal, that is purchase journal. Recall what is the purpose of purchase journal. The purpose of purchase journal is to record goods or inventory purchased on credit. So this is the format. We will start the first column to record the purchase date, followed by the next column to record the particulars, followed by column for invoice number, and then folio, finally the value of the which expressed in terms of ringgit Malaysia. Okay, basically, let us look in detail of how to prepare the purchase journal. Okay, you will start to record the transaction in chronological order. So you start with the earliest transaction. For example, okay, you will go through the transaction and find the date of the occurrence. Next is to record the name of supplier from which the goods were purchased on credit. So this is the name of your supplier. Okay, since you bought on credit, the supplier is also called as accounts payable. Next, you will record the invoice number that attached to the purchases. Next, you will record the folio. What is folio? Folio is to record the reference number of the ledger posted. Remember, we have three types of ledger. We have sales ledger, purchase ledger, and general ledger. So in this case, accounts payable is recorded in purchase ledger. So the code of reference that we use start with PL. PL stands for what? Purchase ledger. And next is we will identify the numbering of the accounts payable. Since if we have more than one, so you are going to rename it as PL, and the next supplier will be recognized as PL2, and the next supplier will be recognized as PL3, and the list will be continued. Next, at the end, you will total up the amount of purchases made during the year, okay, where the total then will be transferred to purchase account. So purchase account is an example of nominal account. What is nominal account? Nominal account consists of accounts under revenue and expenses. So nominal accounts is categorized under general ledger. Okay. Since you might have more than one account under general ledger, so you have to put the number for the reference. So since you start, we assume that purchase account is the first account in general ledger, so you will record it as GL1. Okay, let us look on the following example to have better understanding. So these are the sample of transaction for goods purchased by credit. We have three transactions here, 10 April, followed by 20th April and 28th April. So the first step is to record the transaction in chronological order. So you start with the first transaction, April 10. You purchase from who? So this is the name of your supplier or the accounts payable. So you start with 10 April from Ali, the invoice name, and the folio is the code of reference that you use. Remember, accounts payable are the accounts under purchase ledger, and since Ali is the first accounts payable or your first supplier, so you name it as PL1 and record the amount. So you follow the same one for April 20, goods brought from Rama. Okay, you fill up all this information and followed by Chan. Remember, please put the reference accordingly. Since you have PL1, so Rama should be recorded in the next code of reference, that is PL2, and Chan is PL3. At the end, you have to sum up all the purchase transaction on credit during the year, and this amount, 600 ringgit, then will be transferred to purchases account. Since purchases account is account under general ledger, so the code of reference will start with GL. And since this is the first account in general ledger, so we put it as GL1. Okay, next we are going to learn how to post the information or the transaction recorded in the journal to the ledger. So you have to follow all these steps. Okay, I'm going to explain this step based on this solution. So this is the solution of posting from journal to ledger. Remember what is ledger? Ledger is the account. So we have here purchases ledger and general ledger. So the transaction of purchase on credit on the double entry system is you will debit the purchase account. How much is your purchase? 600 ringgit. And you will credit the accounts payable. So we have 3 accounts payable here. We have Ali, Rama, and Chan. So at the end, when you record the accounts payable, you have to record the amounts accordingly based on the individual supplier. And the total at the end should tie back to 600 of the total purchase. So what you do, the first step, after you have identified the double entry, you will post the transaction in the journal into the purchase ledger. You will transfer this into the purchase ledger. So we have put the code of reference here, PL1. So you will open PL1 Ali account, followed by PL2 Rama account, and PL3 Chan account. So you will record on the credit side of accounts payable. So on credit side, you will record the detail of the transaction. So on April 10, particulars purchase and the amount is 100. And the folio in the purchase ledger is referring to the name of journal. Okay, we put in the acronym PJ. PJ stands for what? Purchase journal. So you do the same thing for Rama and Chan. Finally, you will transfer the total of the purchases into the general ledger. So as you can see, you have renamed the reference of purchases account as GL1. So this is GL1 referring to purchases account, and you will record on debit side as total credit purchase, 600 ringgit. Remember in chapter 4, we learned that the business transactions are entered directly into the accounting records by recorded in the ledger. Okay, we record in the ledger directly. Why? Because we want to see the effect of each transaction in the accounts. But in this chapter, in practice, we have to record in the journal first. So when you start recording in the journal, what you need to do is that you have to capture the total amount. Therefore, when you transfer the purchases amount in the purchases account, instead of recording the debit entry by the name of the accounts payable, you have to replace it by just recording with this particular total credit purchase. So this is how you need to post the transaction from journal to ledger. And it's quite different from what we learned in chapter 4, because in chapter 4, we are recording the information directly to the ledger. We skip the journal transaction because at that time, our objective is just to show the effect of the transaction into the ledger. That is why we don't record it as a total. Instead, we record it by individual transaction on the accounts payable. So this time, when you are required to prepare for journal, you have to follow this step. Okay, remember, in purchases account, you just have to transfer the total credit purchase, okay, collected from the purchases journal. So at the end, you will verify that the total in the purchasers account debit side is tied back with the total in the purchasers ledger in the individual supplier account as follow. Okay, debit 600 ringgit and credit 600 ringgit also. But the 600 has been um, uh, divided according to the name of the supplier involved. Okay, next we go to sales journal. Okay, as for the sales journal, the formats are more or less the same as the purchasers journal, where we will have to record the date, the particulars, invoice number, folio, and the value in ringgit. But the difference here is that the particulars here will record the name of the customer. So the name of your customer. The customer is called as accounts receivable. So accounts receivable are accounts recorded in the sales ledger. Again, okay, we use the reference number, okay, and since it is recorded in the sales ledger, so the code that we use is SL. And if you have more than one, you have to put the number. For example, SL1, SL2, SL3, and continue. At the end, you find the total, and this total of sales is to be transferred to sales account. The sales account is under general ledger. Why? Because it is a nominal account. So you put the reference as GL, and if this is the second account in general ledger, so you record as GL2. Why GL2? Because GL1 has been used to record the purchases account. As you can see in the previous example, we have used GL1 for purchases account. So we cannot use the same code of reference for sales, or else it will be misleading. So we use another, continue for the next code, GL2. Okay, these are the example of transaction goods sold on credit. Again, the same step as per purchase journal. You record all the transaction in chronological order, and then you transfer all of this in the you name the folio where the transaction to be posted later on as SL1, SL2, SL3, and the total of sales will be posted to GL2. Okay, so these are the steps will be explained in the following solution. So, how to post from journal to ledger? Identify the journal entry. Okay, remember this is what we learned in chapter 4. Sales made by credit, so we will debit the accounts receivable and credit the sales account. So how much of the sales? 900. And this sales is made to whom? Lim, Min, and Man. 200, 300, 400. So at the end, this one should tie back to the total sales. So to post into the ledger, we will start by transferring the sales transaction for each of the accounts receivable involved first. So as you can see, okay, let us cross-check, okay, whether we have prepared it completely or not. Okay, SL1, sales ledger 1 is referring to Lim account. Sales ledger 2 is referring to Min account. And sales ledger 3 is recording to Man. So we will transfer this transaction into sales ledger. So in sales ledger, the accounts receivable need to be debited. So we will debit the amount as follow. Okay, so this is how we record in the sales ledger. And next, the double entry is general ledger on the credit side. What you need to do is you just have to sum out the total and record it as total credit sales 900 ringgit. Okay, forgot to mention just now, the date will be at the end of the month. So since April has 30 days, so we will record at April 30 as total credit sale. So at the end, please verify whether the amount is tied back or not. So debit side is 900, credit side is 900. Therefore, the answer, we assume that the recording is correct. Okay, what we have next is written outward journal. So the purpose of written outward is to record the goods returned, okay, from the purchase made on credit. Okay, so if you bought the goods on credit and you want to return it to the supplier, then the transaction will be recorded in the written outward journal. But if the goods have been bought by cash and you want to return and you receive cash in return, so that kind of transaction is suitable to be recorded in the cash receipt journal. Okay, the format more or less the same as the purchase and sales journal. The only difference here is the number of the document, and instead of using invoice number, we use the credit note number. Okay. Okay. As for the folio, okay, since we are returning to supplier, therefore the particulars here will be the name of our supplier. Who is our supplier? Accounts payable. So accounts payable, remember, we have opened the account previously when we do the purchase journal. Therefore, you can reuse the same code if the name of the supplier already recorded. Okay, let us look on the following example. Okay, we have two transactions related to the goods returned to supplier. One is goods returned to Ali and one is goods returned to Rama. So we open the written outward journal by record the transaction in chronological order. So we start with Ali. Remember, Ali is our supplier. We already opened his account previously. We name it as PL1. So what we need to do is that we just have to reuse the code and update the account later on. Similar to Rama, okay, Rama is also has been, his account has been opened previously and we use the code PL2. So we just maintain the code and just update the account. Okay, at the end, when you have record the individual transaction regarding the written outward, we will total out the value. So the value amount here is 25 ringgit is referring to written outward. So we will transfer written outward later on. Written outward is another example of general ledger account. This is accounts not recorded in the sales or purchase ledger, so it will be recorded in the general ledger. Okay, since we have two accounts in general ledger before, that is purchase and sales account, therefore written outwards account need to use the code GL3. Okay, we have to continue the sequence. We have GL1, GL2 already, so we will use GL3 as a reference number for written outwards account. Next, we will post the transaction in journal to the ledger account by following the following step. Okay, let me explain the step in the following answer. So from written outwards journal, we will record or post it into the ledger. So the double entry will be, we will debit the accounts payable as to reduce the amount that we owe to them, and we will credit the return outwards account. So how much is the return outwards? 25 ringgit. And this 25 ringgit return is made to whom? To Ali by 10 ringgit and to Rama by 15 ringgit. So at the end, it should tie back to 25 ringgit. So first of all, you will transfer this individual transaction in the journal into the following ledger. So this is how you record debit account payable Ali, debit account payable Rama. Okay, the folio here refer to the reference number of the journal. So we use the acronym ROJ. ROJ stands for Return Outward Journal. Next, the double entry will be credit return outward. So return outward is using this code GL3. So we will record in the credit side of the return outward journal with the total amount. So you can see this is how we cross-check. Okay, PL1. Okay, since we have already opened Ali account as PL1, so you just maintain the code and just update the transaction. As you can see in previous transaction, April 10, we have recorded the transaction related to purchase. This is the first transaction that we record before. And when come to return outward, we just have to update the transaction in the same account. Similar to Rama, we already opened SPL2 before, where we record the amount of purchase made. And when it comes to return outward transaction, we just have to update the same account as follow. But as for return outwards, okay, this is a new account. Okay, this is a new account. So you have to open GL3. You cannot use GL1 or GL2 since it belongs to purchase and sales account. So you will open the return outward accounts and straight away put the total as follow. Okay, to verify whether the accounts has been recorded correctly or not, you have to check whether the debit and the credit entry is tied back or not. Okay, next we move to the return inwards. We just have to focus on the name of the customer that returned the goods, since the format are more or less the same. Okay, so since we are using the the account of our customer, okay, since we are recording the account of our customer, because return inwards is to record the return of goods sold by credit from our customer. Therefore, we are going to use the folio here as the sales ledger. Okay, we have to use the folio here as sales ledger, not purchase ledger, since we are going to record the name of our receivable here. At the end, again, the same process happen. You will total up, and this amount is called return inwards. And this return inwards is another new account under general ledger. So you have to give a new reference number to this general ledger as follow. So these are the transactions. Example, goods returned by customer. Who are our customer? We have Lim and we have Min here. So Lim and Min is our customer. Now they return goods to us. So first thing, you record the first transaction, April 13, from Lim, put the credit number, and we use folio SL1. Why? Because we already opened Lim account before this. So you just maintain the same code and update the account. Similar to Min, we can record the returns good by Min, and we use the old reference number SL2 because we already opened Min account. Finally, okay, the total of return inwards will be transferred to the return inwards account, where this is a new account in general ledger. So we will use GL4. Okay. Again, these are the steps to post transaction from journal to ledger. And let us do the answer together. Right. The same procedure repeated. So the first thing is to record this individual transaction of return inwards into the sales ledger account. So as you can see, this account already opened SL1. So SL1, previously we have recorded the transaction regarding the sales. Regarding the sales. Okay, this is the first transaction we record before. Similar to Min, this is the first transaction we record before. So now, to record the transaction for return inwards, we will update the account as follow. Okay. So how to decode the debit and credit? You have to remember the double entry of this transaction. So when there's a return inward, you have to reduce the debt of your customer. So what you need to do is that you will debit return inwards account and you will credit the accounts receivable as to reduce the debt due to the return. So the return inwards is 50 ringgit and the account receivables to be reduced is lim by 20 ringgit and min by 30 ringgit. So at the end, this check, it must tie back to the total return inward. So now let us pause the transaction together. Okay, let's continue. We have stopped at SL1 just now. So next is SL2. Okay, SL2 is min account. So these are the transactions to be recorded. And finally, the total 50 ringgit here is to be transferred to return inwards account under general ledger and we use the code GL4. So GL4, at the end of the month, just record as total return inwards 50 ringgit. So please check, it must tie back the debit entry 50 and the credit entry in the accounts receivable by the same amount. Okay, next, we come nearly to the end. The next is cash receipt journal. So what is the purpose? Is to record all cash received by a business. Okay, the format is quite different. As you can see, we have few columns here. We have first column, date, followed by reference number. Accounts to be credited. Why credited? Because cash received is to be recorded in debit side. Therefore, the accounts that involved in the transaction, okay, needs to be credited. I mean the particulars of the amount, where the source is coming from, is to be credited. Next is to record the folio. Okay, what is folio? Again, folio is the reference number to use where the transaction has been posted. I mean the reference number of the ledger used in posting the transaction. Okay, and we have bank and cash column here. So bank is to record the amount that received in terms of check. But if the amount of money you receive in terms of cash, therefore you will record in the cash column. So it will be used either one. You cannot use both if the transaction is only mentioned about money received from check, by check and money received by cash. So if the money is received by any one of it, you have to use the appropriate column. Bank is to record money received by check, whereas cash column is to record money received in terms of cash. In addition to this column, we have another 3 additional column here in this black color. This is to use the record it's used to record the sources that lead to the receipt of cash. Basically, these additional column is to identify whether the double entry system has been recorded correctly or not. Okay, so that is why we record these 3 additional column. And the most important here is we need to know the total of sales, because at the end, we will identify the amount of cash received from sales from cash receipt pay journal, and we will transfer this amount directly to the sales account. So as you can see at the end, we will transfer to the general ledger based on the account that we post. Okay, let us look on this example. These are the example of cash receipt transaction. Okay, the first one. The owner bank in cash to the business 20,000 ringgit. So what involved here is that there is a cash inflow from the owner into the business. So what will be the recording? First, you record the date of the transaction, 1st April. Reference number, if any, yes, we have reference number here. And the accounts to be credited. Why capital? Because here it will be debit bank, okay, because you put the money into the bank, and you credit capital because the owner contribute the money. So the accounts to be credited will be capital. So you put capital here. And since the capital is another new account in general ledger, so you use the code of reference GL5. Okay, we will continue because the previous transaction we have is GL4, stands for written in words account. Okay, now we have another one account in general ledger that is capital. Capital is a real account. So real account, it is under general ledger. All right. And since you bank in the money, so you record under debit column because the money has been banked in. So the money is in the bank side. Okay, this money is not related to any of these transactions, so just leave blank. Okay, next, April 5, sold goods worth 3,500 to 1 by cash. So there is a cash inflow here. Record the date, the reference number, and the accounts to be credited. Why sales? Because when you make cash sales, so you debit cash because you receive cash, and you credit sales. You cannot credit one because one is not owing to us. Okay, she paid by cash immediately. So the credit transaction, credit account will be sales. So credit sales, since sales is already recorded, so what you do is that, okay, you just maintain the GL, you just maintain the GL and you use GL2. And you put in cash column because you receive the money by cash. And since this sales related to, this transaction related to sales, so you update also the amount in the sales column. Later on, we will see the function of this column. Okay, April 23rd, 25th, and 27 is the transaction related to the check received from your customer. Okay, by check. So again, these accounts already open, so you just use the same code SL123 and record in the bank column since you receive by check. And don't forget to update also your accounts receivable. This is to check later on whether this amount has been recorded in the accounts receivable or not, because this transaction is related to lien, min, and month. So later on, you have to check lien, min, and month whether this amount has been recorded also or not. Okay, last but not least is April 29, another sales by cash. Okay, you made sales by cash to mine. So you record the information as follow. And since sales already open, so you just maintain GL2. You don't have to use a new reference number. Just use the old one. Okay, maintain the account. And you record in the cash column. Okay, since this transaction is by cash. And don't forget to update the sales column. So at the end, what you need to do is that you have to sum up the total. Okay, please sum up the total. Bank column 20,750, cash column 4,500, and sales column 4,500. So at the end, you are going to transfer this amount to this account. You are going to transfer to bank account, cash account, and sales account. Okay, since bank account is the new general ledger, is the new account in general ledger, so we have to use the code of reference as GL6. We will use the reference as GL6 for bank, and for cash, also new account in general ledger, so we continue the code GL7. But as for sales, we already opened the account, so you just maintain GL2 for sales. All right, so this is how we transfer. Or before that, let us look example for cash payment. Okay, the format is similar. as you can see here, but the difference here is just now we are going to use accounts to be debited. Why? Because for cash transaction, we will credit the cash or bank, right? Therefore, the accounts to be debited is referred to the source where the money has been paid. Okay, again, we have bank and cash column, and we have these three additional column, but we will rename in according to the transactions that related to the cash payment, such as discount receipt, because when we make payment, if we need to pay less than what we should, so the reason behind the difference is usually referred to the discount receipt. And then the payment that we always make is to the accounts payable, and the payment is also related to the purchases. So at the end, you will transfer all of this to the respective general ledger. Okay, let us look on this following example. So these are the sample of cash paid transaction. April 2, you purchase goods by check. So record the date of transaction, the reference number if any, and the accounts to be debited. Why purchase? Because when you make purchase by cash, you will debit purchase account and credit. Okay, since you pay by check, so you credit bank. So the account by default, the account bank by default is on credit side. Therefore, you have to find the accounts which need to be debited. Okay, since purchases account already open in general ledger, purchases account already open in general ledger, so we just use the old code of reference and record in the bank column since you paid by check. And don't forget to update on the additional column on the purchase column since this transaction related to purchase. Okay, on 8th of April, you pay rental by cash. So again, record the date, the reference number, and the accounts to be debited because when you paid rental, you debit the rental account. Okay, you credit cash. So rental is a new account under GL. Please continue the code of reference to GL8 and record in the cash column. As for April 22 until 28, okay, you pay to your creditor, Ali Rama Chan. They are your creditor. Okay, your creditor is already open. So you just have to use the old code of reference, PL1, PL2, PL3, and record in the bank column since you made the payment by check. And don't forget to update in the accounts payable as to check whether this transaction has been recorded in the accounts payable or not. Last but not least, on 30th April, you paid utility bills by check. So accounts to be credited is utility because debit utility, debit the expenses account and credit bank. Okay, so utility again is a new account under general ledger. So you have to use this new code of reference GL9. Record in the bank columns because you made the payment by check. At the end, you have to total up the amount that you pay for bank by check, by cash, and the amount of purchases made by cash. Okay, bank account you already open. Okay, so you just maintain, you use GL6. Cash account also already open, so you use the old reference number GL7. And purchases account also already open, so you use GL1. So now we are going to show you how do we post the transaction from journal to ledger. Okay, since we have many transactions here, first thing first, what we are going to transfer, we are going to transfer the total receipt, okay, and the total paid. Right, so the transaction here, we transfer to GL6 first. Okay, remember GL6, we have to transfer 20,750 and these accounts need to be since this account is credited, so these accounts need to be debited. Okay, because you receive, the receipt of money is to be debit cash or bank. So first we go to GL6. Here is GL6. So we debit the bank account. By how much? 20,750. So you just have to write total cash receipt as follow. The folio is cash receipt journal. Remember, you don't have to record one by one as what we learned in chapter 4. Since we already prepared the journal, so you just have to transfer the total or the amount. Okay, next, debit cash account. Cash account is GL7. So open GL7 cash account. Okay, record on the debit side. Total cash receipt, 4,500. Okay, next is to record the total paid. Okay, we use different color to differentiate it. Okay, we have 2,610 and 1,000. As for the cash payment, these accounts need to be credited because when you paid, you will record the amount of resources that you paid and the cash or bank will be credited. So we will transfer to GL6 first. GL6, okay, bank account we already opened. So what we do is we just update the total payment. And then GL7, we already opened GL7 also. So you just update the total cash payment. Okay, next is to record the sales and purchase made by cash during the year. As for sales, during the year, we have a cash sales of 4,500. So 4,500 is to be transferred to GL2. So this is GL2 sales account and credit side as total cash sales, 4,500. Cash receipt journal, Cash receipt journal. It should be cash receipt journal, CRJ. Okay, next is the amount made, amount of purchase made by cash. So you have 2,000. This is to be recorded in GL1. So go to GL1. We already open purchase account. What you need to do is that you have to record the total credit purchase. So April 30, total cash purchase, 2,000. Cash payment journal. Okay, so we're done with this one, but we do have other transaction. For example, this one. Okay, this one, right? Rental, Ali, Rama, Shan, utility. So the answer are as follow. Okay, so you can see the step here. Okay, we debit cash, we credit capital. So capital accounts, we need to open. Okay, and we use the code GL5. Okay. So open GL5, capital account, credit, okay. So April 1st, bank. Cash receipt journal, 20,000. Okay, next is to record the rental. Okay, we have rental here. We open GL8 as rental account and accounts to be debited. The accounts to be debited, so you debit cash 1,000. Why cash? Because it is paid by cash. This one, why bank? Because you bank in the money. Okay, next, utility. Okay, utility, you open GL9 as utility account. Okay, debit the account. So debit side, April 30, bank, 100. Why use bank? Because the payment is made by check. Okay, the last one is, yes, to record this one, as I mentioned to you just now. The cash receipt and cash payment also involve the account receivable and account payable. So we will update SL1, SL2, SL3 as follow. So this is SL1, SL2, SL3. Previously, we already recorded this transaction. So these are the transaction that has been recorded before. We have written in words. We have records on sales. So these are the previous one. These are all the previous one we have record. So now we just update the transaction that involve the cash flow. Okay, 150. So we will credit 150 here. April 23rd, bank, 150. Okay, mid, 250. So April 25th, bank, 250. And 350. April 27th, bank, 350. Alright, similar to the cash payment. Okay, we will update the purchases ledger, PL1, 90. So PL1, okay, early account. What you do is you debit the account. PL2, Rama, okay, you debit the account. And PL3, 280, okay, Chan, you debit the amount. Okay, and the rest are the whole transactions that we have recorded before. So this is how you update the account, okay, one by one. Okay, last but not least, we come to the general ledger. So as I mentioned you just now, general ledger is a book to record other transactions that not recorded in the specialized journal. So this is the format. We start with date, followed by the particulars. Particulars is referring to the name accounts that need to be debited and credited, and then to record the folio. So I think up to this point, you already understand what is folio is, and the amounts that you need to debit and credit. Okay, let us look on these two examples. These are the transactions that cannot be recorded in any of the specialized journal. The owner brought office equipment worth 800 into the business. So as you can see here, the owner brought, okay, office equipment. So this is asset class. This is non-current asset brought by the owner. There's no cash flow involved because you don't purchase it. Okay. And even though there's no cash involved, you cannot record in the purchase journal because this is not stocks that you bought for resale. This is office equipment you bought for the use of the business. So the most suitable transaction, the most suitable journal is general journal. So record the date, record the amounts to be debit and credit. So since the owner brought the office equipment, there will be increase in the asset. So debit office equipment, and there will be increase in the owner's equity. Therefore, credit capital. So this is for debit side and this is for credit side. Okay, since office equipment is a new account in general ledger, so you use the new code GL10. Capital is already open. So as you can see, back in the cash receipt journal, okay, when we open the capital account here, remember when we first open the capital account here, okay, we already opened capital account. So we use the GL5. Now, when you need to use the capital account again, you just have to use the same code, right? So you don't have to open a new code of reference for capital and record the amount debit and credit. Okay, continue on April 18. The owner took goods for personal use. So the drawing of goods is another example of transaction that cannot be recorded in the specialized journal because first, you don't involve any cash flows to be recorded in the receipt or payment journal, and there is no purchase or sales or return of goods by credit. So record the date when the owner took goods. Okay, there will be a decrease in your purchase expenses. So decrease is to be recorded on the credit side of purchase account, and there will be decrease in the owner's equity. So debit drawing. So decrease in your expenses, decrease in your owner's equity. This one, increase in asset, increase in owner's equity. So that's how you get the debit. Okay, this is the debit and this is the credit. Okay, again, drawings is a new account, so you have to use the new code or reference GL11. As for purchase, you already opened, so just maintain the code and please record the amount to be debited and credited. All right, this is how you transfer the transaction from journal to ledger. Okay, open GL10. Okay, open GL10. GL10 stands for what? Office equipment. So GL10, please record in the debit side, April 4 capital 800. Okay, next, GL5, we already opened GL5 capital. We already have one transaction here. So next, we record April 4 office equipment. Next is GL11. So GL11 is another new account. So you open for drawing account, record in the debit side. Okay, last one is the purchases. GL1, we already opened. So we just update. Okay, we have transaction on drawing on April 18. So this is how you transfer the amount from journal to ledger for general journal transaction. Okay, so as conclusion, we have finished discussing all the journals and how do we post the transaction for journal to ledger. So let us check out the full sets of accounting records in the next handout. Okay, so these are the full sets of transaction that I have compiled based on the example that we have discussed in the previous slide. So the transactions start from 1st April until 30th April. So these are actually all the transactions that we have discussed in the preparation of the journal in the previous slide. So what you need to do is that you are required to prepare the following records. So based on the transaction above, you are going to prepare the specialized journal and also the general journal. Next is to prepare the ledgers. Okay. And finally is to prepare the trial balance. Right. So this following answer is actually can be used as a reference or guidance for you to prepare the answer for group project 1, where group project 1 will require you to create your own business transaction based on the requirement and followed by recording the business transaction into journal, ledger, and trial balance. So we will start the journal by opening the general journal. So these are the example of the answer. So the answer is actually the same as discussed in the previous slide just now. So I just combine it together to show how do we prepare the full sets of accounts, starting from the transactions collected from the source document to the preparation of journal, posting to ledgers, and finally to prepare the trial balance. So these are the answers that I have combined. Okay, for general journal, purchase journal, sales journal, return outward journal, and return inward journal. Followed by the cash receipt journal and the cash payment journal. So these are the answers that I have combined under the section of journal. The next is to post the transaction for journal into ledger. So I have separated the ledger into purchase ledger. What is purchase ledger? Remember, purchase ledger include all the individual supplier account or accounts known as accounts payable. Okay, these are the personal accounts. These are the personal accounts. So you have PL1, PL2, PL1 stand for Rama, PL1 stand for Ali, PL2 stand for Rama, and PL3 stand for Chan. Next, we prepare the sales ledger. Sales ledger involve individual accounts of customer or accounts receivable. Okay, so these are also called as personal account. Personal accounts. So you have SL1 for leave, SL2 for min, and SL3 for month. Right? So we have record all the answer and combine together. And finally is to record general ledger. So general ledger involve all accounts other than what? other than accounts payable and accounts receivable. So these two accounts is not classified as general ledger. Therefore, other than that is recorded under general ledger. It involves real account and nominal account. Nominal account refer to the accounts that categorized under revenue expenses, whereas real account are accounts that not categorized under nominal and personal account. So this starting from GL1, we have purchase, followed by GL2 sales until drawings. Until drawings, that is GL11. Finally, what we do is we are going to prepare the trial balance, okay, by identify the debit balance and the credit balance accordingly. So how to find the debit and credit balance? What we should do is that we have to balance off the account. After we have opened the accounts, one, we open the account. Two is we have to close or balance off the account. So how to balance off? You will find the closing balance by identifying the balance brought down. So here, for example, drawing account, you have balance brought down. Okay, you close office equipment, you have balance brought down on debit side. Utility, balance brought down on debit side. Same with rental, cash, bank account, return inwards, purchases. Okay, all receivable accounts, min, month, and lim. Okay, so all these accounts is called as debit balance. These are debit balance and it should be transferred to trial balance on debit column. So as you can see, in the trial balance, we record all the accounts with debit balance in the debit column. And we do the same thing. We will close all the other accounts, okay? So the rest, we will close. So for example here, we have credit balance for Rama account, Sean, sales account, return outward account, capital account. Okay, so we only have about 5 accounts that have credit balance and this to be recorded in the credit side. So at the end, when we compare the debit balance and the credit balance, okay, it should tie back. And if the answer are the same, so most probably we have prepared all the accounts correctly in accordance to the rule of the double entry. Okay, so that's all for this chapter. Basically, we have achieved all the learning outcomes. First is to identify the source of document, followed by preparing the journals and preparing the full sets of accounting records, starting from the information collected from source document until the preparation of trial balance. So with that, thank you for listening and hopefully that you may understand what has been delivered today. Thank you, everybody.